Good morning. Welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Menika Doshi.
And you're watching Indian Open, and I'm Neeraj Shah. Good morning, Menika. I'm not making a mistake.
Well, we're both missing Ira. I know that for sure. All right. Yeah. Let's get to the headlines this morning. Asian markets post their first green tick this week, taking a cue from Wall Street after technology stocks stabilize. Today may be the first of 4 and not 3 U.S. Federal Reserve rate hikes in 2018, shows a Bloomberg poll conducted among 41 economists. Ultratech is prepared to go all the way up to the Supreme Court to defend its bid for Binani Cement, says the company's CFO Atul Daga in an exclusive interview with Bloomberg Quint. And SR Steel's creditors meet today to deliberate over the resolution professionals' recommendations on the bids put in by New Metal and ArcelorMittal. Mishra Dhatu Nigam will be the third defense PSU to hit the primary markets in 2 weeks as the alloy maker's IPO opens for subscription today. So we've got a lot of news lined up today, especially in the insolvency. This part of life, as I may call it that.
Part of life.
Yeah, but of course, the Fed being, attention number one.
Yeah, and I think until then, difficult to see the markets really taking any definitive moves. And I think we've seen evidence of that, Menika, the last 3 or 4 sessions as well. I'm presuming it's because of the Fed meeting that the market volumes across markets are remaining very, very thin. So, I mean, yesterday too, if you see, while we showed a bit of a bounce from those lower levels, the expectation yesterday was, or the question mark in everybody's mind was, when is it that we'll hit the 4-digit mark on the Nifty? But we bounced off a little bit from those lower levels, 10,050 or thereabouts. We went down to those levels and then came off. So that's pretty good. And beaten down names recovered a bit, but volumes have been very, very thin and very unlikely that volumes would recover ahead of the Fed decision today evening as well. So just take a look at some of these numbers. Cash turnover in the last 5 days, save for March 16, which has some bulk deals as well. And look at the NSE column. Less than 29,000 crores, or let's put it, less than 29,000 crores for each of the last 5 days. This is not normal. In fact, in the month of February, we've had volumes consistently hitting northwards of 35,000 crore mark as well. So the volumes have by and large been very, very tepid. Flows the last few days have been very, very tepid as well. You could argue that 770 crores of an odd number on the 16th is a fairly high number. But just look at what the flows are showing. I mean, there's hardly any kind of domestic or institutional participation in a meaningful way, domestic or international participation in a meaningful way in Indian markets. And don't think that this will change too dramatically until we get some cues from the Federal Reserve. And frankly, that remains the key monitorable over the course of the next 24 hours. Though I must say, I mean, it was fairly heartening to see the activity in pharma yesterday. Big moves in stocks like Sun Pharma and a couple of others. And the Nifty Pharma hit those July 2014 lows or levels of almost July 2014, which is almost a 3.5-year kind of a number. And from there, we've started bouncing back a little bit. It's still 38% off the March 2015 high, so there's a lot of room to go. Not conclusive, but just from a trade perspective, I heard a lot of people on the channel yesterday say that there could be a decent trade in pharma. So do watch out for those pockets. They're just so beaten down and showing a smart bounce. So maybe there could be a recovery out there. And then, 2 or 3 stocks to watch, which will move irrespective of what the markets do today. You will have some activity in JSPL. Remember, it was an exclusive that we put out some days back about the QIP. So that's hitting the street. So that could be an interesting one to watch out for. There is also this battery makers report that Motilal Oswal has come out with. Ashoka Buildcon winning one more order, battery makers report. But all of them small things to monitor in terms of stock-specific moves today.
Well, I suppose all eyes will be on what the FOMC decides today. And while I think almost everybody is baking in a heightened possibility of 4 rate hikes this year and not 3, it will be the language of the statement as always that will be under focus to try and determine what their view on the economy is and try and determine whether that 4th hike is a given or not, right? But again, equally, if you read any of the stories that we have up on Bloomberg Quint, on the Bloomberg poll of economists, many economists believe that the language, at least in this policy, will not necessarily change enough to indicate a 4th hike, because that's giving the full game away without all the data having come in for the rest of the year, right? So, and who knows, with the current government in the U.S., there are so many things that could change to impact the economy. So they'll play it safe, stick to the 3 that they've indicated so far, but everybody's expecting a 4th, correct?
Yeah, that's broadly
the sort of across markets expectation.
Yeah, in fact, that's something that we will talk about, of course, on first word as well. But I just wanted to do that setup what Menka just put out right now, I mean, arguably one of the most important meetings that everybody's talking about in the recent times, considering it's Jerome Powell's first meeting as well. I think a lot of debate, Menka, since I mean, just going through the last 4 or 5 months articles last evening, a lot of debate about this inflation versus unemployment trade-off. And I think a lot of confusion happened last time the data points came out, wherein the jobs data looked interesting, but the wage growth or the wage inflation was not hiked. And a lot of people thought that, oh, what will happen as a result of that? I mean, is this confusing data that you have jobs moving up, but the wage growth not looking as strong, and therefore is that indicative of the Fed having some ammo not to go ahead and raise hikes in a meaningful way? Now, again, remains to be seen. The median projection, as you rightly said, at the end of December from almost across the board was 3 rate hikes. Can this change this time around? I just had a couple of things that the terminal is thrown up. I mean, I just wanted to point them out. So if you put in the WARP command on the terminal, the poll suggests that between this is the poll of economists done by Bloomberg. And if you see the third column, maybe not that legible, but if you see the third column, it points towards rate hike from 1.5 to 1.75. And 80% of the economists polled believe that that is the higher probability. 20% actually say that it could well go up all the way to 2 this time around itself, which is a really dim chance, to be honest. And then if you just put those lines on board, and that will show you how the projections have moved over the last 2.5 odd years. The white line is indicative of a 25 basis points hike, the orange line naturally being no probabilities, and the white line clearly shows that almost everybody across from the last few quarters or last few months have been projecting that the rate hikes will be pronounced and will continue. And I don't think that should come as a surprise. The flatness of that line clearly indicates that everybody is on board, that the 25 bips this time around is given, and we will not have a change. I just saw one interesting thing, Menka, which I thought we should point out. There are 2 or 3 references that have come to whether or not Jerome Powell will go ahead and move away from holding 4 press conferences only as opposed to 8. And few people were saying that if indeed that happens, if indeed there is an indication given that there will be more press conferences, it could be seen as the Fed showing to the world that we might not necessarily stick to the script. We might actually take a hike in between those prolonged meetings as well, because until now, post 2011, I think, and that's what I read, that the hikes have only happened when there have been those press conferences. In the non-press conference meetings, they haven't taken the hike. So this time around, they will show that we are prepared to have 8 press conferences instead of 4, and will that confuse the market? Yeah, no, not 8 hikes, but that a hike may come in between those main press conference meetings that would happen. I mean, if that was the normal course of business as well. So people are clutching at straws in order to get indications. I don't know about this 8 press conference
thing. I just wanted to add to the bit where you spoke of, as yet no signs in wage in growth, sort of playing out on the inflation picture in the U.S. I think the Fed will also be looking at very clearly a couple of fiscal policies by President Trump. One is, of course, the tax cuts and what that means for the economy, how that impacts growth. Secondly, he has been articulating for a long time now the desire to pump in a lot of investment and spending in infrastructure in the US. And, that announcement's now been expected for many, many weeks, $1 trillion up to. So what that impact will have. So I think these are all factors that will play out, not necessarily just from the wage inflation point of view. That's been a sticky issue in the US. And finally, I think just take a look at the 10-year, which is not very moved, but the 2-year has moved up considerably. So if you look at the gap, the 2 years at roughly about 2.3 and the 10 years at 2.8. And we've seen the short end of the curve in the US, move up quite sharply, over the last few weeks. So that's something to watch out for as we go into the policy decision later tonight.
Yeah, so let's pose those questions, if you can, to Jonathan Garner. He's Chief Asia and Emerging Market Strategist at Morgan Stanley. Starting off, of course, with the Fed, but Jonathan, we would want a lot more. But let's start off with the risks of the Fed governor sounding hawkish when he sketches out his view today on the policy. And how high do you think is the possibility that he may be more hawkish than what the street is estimating, Jonathan?
Well, I think what's really interesting is that the private markets, the LIBOR markets, dollar LIBOR, has already moved far more aggressively than Fed funds. So if you look at 6-month dollar LIBOR, it's actually reached 2 3/8, whereas the Fed is likely to raise Fed funds by 1/4 of a point to 175. So we've actually already, for the interest rate that really determines corporate costs, are experiencing a very significant increase in interest rates. So unless the Fed is in some ways sort of super dovish, I think we're already looking at a significant tightening of monetary policy in the US. And in addition, China is tightening monetary policy at the same time. And this joint tightening is a key reason why we're so cautious on markets here.
So, Jonathan, could there be 3 hikes, or will they give any kind of indications that there could be a 4th one as well? Is it too soon to do that? And are the markets already pricing that in?
It'll be 3 or 4, but as I tried to indicate, that it's not actually really the Fed that's in the driving seat in relation to corporate cost of funding. The dollar LIBOR markets, which is actually where corporates borrow at, have already moved to 2 3/8% for 6-month money. And that's, again, a key reason why I think markets have struggled, because the acceleration in the tightening up of private markets, dollar LIBOR markets, is the story of the year, not the Fed.
If that's the case, Jonathan, what's your forecast for the global equities in that context?
Well, our thesis for the year was a rougher ride, and we had a number of things we're concerned about. The reduction in the Fed's balance sheet and actually the fiscal easing in the US is probably one of the reasons why money markets are getting so tight, private money markets. There's some evidence that the Treasury bill issuance by the US government is actually crowding out private borrowers to some extent. And at the same time, we have exceptionally high valuations for the non-financials part of global equities, and overly optimistic earnings expectations in my coverage, certainly in Japan and in North Asia in particular. So this sets us up for a market which we are pretty sure reached its highs for the year in the euphoria of the 3rd week of January. And the rest of the year is quite simply going to be a tough market. And so we're now 2 months since the market's peaked. And I think that thesis, which was very counter consensus in January, is becoming more well understood in the marketplace now.
Okay. Jonathan, last week, data suggests that global investors put in the highest amount into global equities in a long time, nearly 43 billion, which was pulled out from the money markets. So that seems to suggest that in certain pockets of the market, there is a risk on. And here you're sounding very, very bearish.
Yeah, so global equities are experiencing fund inflows, but they've been somewhat choppy. And in my area of expertise, Asia and EM equities, we actually saw in the 3rd week of January an all-time high dollar inflow week, about $8 billion. You're referring to the total universe of flows, which was skewed towards US markets. When you see euphoric fund inflows, it's typically characteristic of a market top. Retail investors are allocating money to the market, but each institutional investors, our evidence is, are reducing risk in equities and moving particularly into shorter dated bonds. So I think that, again, the flattening of the yield curve, the fact that the dollar LIBOR rates are going up, but 3 to 5 year maturity yields have stopped going up, is really kind of indicative of just how near to the end of the cycle that we're getting. So I would put the retail investor inflows into the bucket of something to be concerned about. If you go back, for example, to early 2016, there were very large retail investor outflows, and that's typically characteristic of a market trough, and was on that occasion.
Jonathan, what about the commodity and the currency story? And will the supposed bottoming out of the dollar prove to be a cap on commodity prices, particularly crude?
Yeah, we don't think the dollar is going to be as weak this year as last year. And against some EM currencies, and that does include the Indian rupee, we would expect their parities actually to weaken up somewhat against the dollar going forward. It comes back again to what I started the interview in talking to you about, the fact that dollar LIBOR markets have moved up a lot. So you're getting a much higher interest rate if you lend into dollar markets than you were this time a year ago, and that interest rate's increasing on a daily basis right now. So the competition in relation to relative money market rates is certainly picking up, and that should stabilize the dollar.
Okay, what about, okay, fine, so that's the currency bit. What about commodities? Do you think crude has hit areas wherein we could say that it's a near-term top for that? And what about the other commodities as well?
We're more bullish on crude than we are on metals and mining. So we think the Brent price averages $75 a barrel this year, and it's a story of relatively tight global supply, in our view, and actually continued strength in demand in both China and India. And that, I think, keeps the market relatively tight. Whereas in the case of the slowdown we're seeing in Chinese property, we would expect things like iron ore to soften. Indeed, iron ore has been quite weak over the last few days.
Jonathan, can't not have a conversation about India. What's your view on emerging markets in general and India in particular? And is the spate of good news which buoyed investor sentiment in India coming to a bit of an end?
So we entitled our mid-November year ahead piece A Rougher Ride, so I think our view was perfectly clear then. What then happened was markets moved beyond our base case targets, overshot them significantly in January. They've now come back in some cases pretty well at our targets. You look at Hang Seng on the MSCI EM index, we're almost at our year-end targets. But I do think near term, particularly with the trade protectionism agenda coming out of the US, there's a possibility that we undershoot to the downside. And obviously these are continually under review. But what I would say is that I don't see any particularly good news on the horizon at the moment for markets. Now for India, we were very overweight India last year, but we've been reducing our overweight. We've done it twice, and we've got a very small overweight left on India right now. And I think what, again, one has to be cognizant of in relation to India is the backup in government bond yields in India, which threatens to withdraw some of the flows we've been seeing from on the domestic mutual fund side. But the good news about India is that its growth trajectory is much less trade dependent than other major EM. Its growth trajectory has actually finally picked up, so that is the good news story about India.
Okay, Jonathan, we'll leave it at that. Many thanks for joining us today and giving us that perspective. Well, here we have Jonathan Garner saying that the dollar IBOR has already moved, and that's the bigger indicator than the Fed.
I think the short end of the curve is what is currently, sort of occupying conversation in the US, exactly as I was, sort of mentioning. But yeah, great perspective on what to expect tonight and what the markets are looking like globally. FOMC is one big story, but the other big story this morning that we are following has to do with everything that's going on in the insolvency space. And today it's the turn of SR Steel. Well, the creditors are going to meet finally today to discuss the resolution professionals' recommendations regarding the eligibility of the two bidders for SR Steel. And those two bidders, as you know, are New Metal consortium that's sort of led by Russian bank VTB and also has some Ruya presence in it by virtue of Revant Ruya's participation in that consortium. And the second bidder is, of course, ArcelorMittal. This case is likely to set a precedent for what or how the eligibility of bids are viewed in other important resolution processes that are currently underway. And Vishwanath Nair has all the details on how this is going to go down. So I think for a long time, Vishy, we've been expecting that the resolution professional is quite likely to say both these bids are not eligible.
That's what is coming out, at least across news reports that we've read and bankers that we've spoken to. They're all expecting this negative sort of eligibility report coming in from the resolution professional. Remember, this process is going on for a very long time now. So for weeks, the resolution professional has been working with these international due diligence firm, Kroll, as we understand it from our sources. So they're working with them, and they've now completed due diligence, and the RP will submit his report, essentially saying that both these bidders may not be able to make the cut under Section 29A of the IBC. The bigger problem is then where does this case go? Because these two bidders were considered to be when we were discussing about SRC. Now that the field is open again, will if it were to be open again, we would want to see if rebids are called, and if so, who actually comes back and bids for the company. In the last round, during the expression of interest stage, there was Vedanta and Tata Steel both had put in their expression. There was also Nippon who had put in an expression of interest by itself and then joined hands with ArcelorMittal to put in their bid. We don't know if any of those equations are going to change now after today's discussion, but today's discussion is crucial to see how the resolution professional, after a number of studies, comes up with
some critical things here. I think one is that if they were to call for rebids, does that give New Metal the opportunity to take Ruya out of their consortium equation and therefore present a more eligible offer? And equally, does that give ArcelorMittal the opportunity to do whatever it takes to become more eligible? Mostly it is the previous relationship it had with Uttam Galva. And today there is a Financial Express report saying that, in fact, ArcelorMittal may pay back or may pay
3,000 crores or something, Uttam Galva.
the creditors of Uttam Galva 3,000 crores in an effort to close out the dues there, because don't forget, for the longest time they were termed co-promoters
in this. They owned about 29% stake, though the company has always claimed, ArcelorMittal has always claimed that they are not promoters in this matter.
Both bidders have claimed that they are eligible.
They are eligible, yes. In fact, New Metal has offered to take out Revan Ruya's stake. We reported last week that they submitted a letter to the lenders saying so. But of course, we'll have to see how lenders actually look at eligibility and come back to them.
Okay. You know, it's interesting. Tata and Vedanta, you said, also put in expressions of interest.
Yes.
Do we know if there are any chances that if there were a rebid, whether they would actually get a chance to participate, given that they did not participate in the final bids?
Well, it's an open field, right? That if it goes into rebid stage, it's an open field. I mean, if the current bidders can participate again by making some changes in their structure,
all those who expressed interest
should also be allowed.
Have a chance
because essentially they would probably get the first, chance to actually submit a bid this time around. But we read news reports where some unnamed official at Tata Steel has said that we have our hands full. There's also already Electro Steel, Bhushan Power and Steel. All these companies are with Tata.
You know, this is but the most amusing part, the most interesting part of this entire exercise is not just the potential ineligibility of New Metal and ArcelorMittal. I think there is a newspaper report today about the NCLT in Calcutta commenting on a petition filed in the Electro Steel's case by Renaissance Steel, and Renaissance Steel has made the argument that Tata Steel too is an ineligible bidder under 29A of the IBC.
Tata Steel and Vedanta.
Are both ineligible bidders because both were involved in criminal litigations or in criminal cases
where they could have been
arrested. Which is one of the ineligibility criteria under the new law. So at this rate, I have a feeling that there is not going to be a single steel company in the world that is going to meet the eligibility criteria for any of these steel assets. And I'm guessing the promoters of these assets will be very happy with that situation because then it will be only up to them to be able to rescue the asset, if at all, So it's just really interesting to watch how this eligibility criteria bit is going to be interpreted. And equally, I think parallelly we have news that the eligibility criteria itself may go through a rewrite at the government
so news reports suggesting that there might be a chance where some promoters can make an in, or at least connected parties can somehow make an in, but that's still all news reports at this point. I mean, I'm no confirmed stories on that.
Okay. Anything else to add in terms of the implication on other resolutions?
Other resolutions, well, it entirely, because what happens is in cases where, in smaller cases maybe, where promoters and co-promoters or people associated with the promoters were denied entry, they would all, it opens up a gate of litigation for them as well, a chance for them to make their presence felt. So big investment there.
Yeah, well, okay. So that's today's masala on the insolvency process for you. And that sort of sums it up on what we can expect. We'll know later this evening.
Yes, later this evening. Yeah.
All right, cool.
Yeah, that's
What's
interesting.
the final thing we have on first word today?
Yeah, well, Uday Kotak had a lot to say in the stress in the Indian banking system as well. Vishwanath Nair, of course, spoke to him as well. And Uday Kotak expects the next big hit to come from the SME sector. The only saving grace, according to Kotak, is the credit growth witnessed in the private sector. Listen into what he had to say about the future of Indian banks.
I'm embarrassed to say that the amount of losses which we as a nation are sitting on out of our banking system, for whatever reason, this is not the India we've dreamt of. I mean, the purpose was that we, through state-owned banks, are able to broad base lending to smaller businesses. Now, whether it's big banks, private banks or public banks, today, bulk of the losses are lending to big businesses, whether public sector or private sector. On a delta basis, nearly the entire growth in the loans is happening in private sector banking, whose share is growing pretty significantly. I'm happy to make a statement that in the next 5 years, this 70-30 ratio will move towards 50-50. So what was originally a 100 rupee loan in 2011 has become a 200 or 250 rupee loan today. And it just kept on bloating for a period of 7 or 8 years. So we are here now with a huge bloat, and at this stage, I'm embarrassed to say that we are amongst the top 3 countries in the world with the levels of stress. And who are our companions? Greece and Italy. The belief is that a lot of the challenges in the banking system are essentially on the large businesses. I think we have also a pretty sensitive underbelly of the SMEs business, which has not fully revealed its hand yet. Fundamentally, I think what needs to be done from the point of view of private sector is we need to ensure that we have our processes, our operations, our risk management, and our whole credit underwriting process to be significantly stronger. And there is no, let me put it this way, bad underwriting is ownership neutral. It could happen in public sector or private sector. Therefore, ownership alone does not decide the quality of underwriting.
Is this the India we dreamed of? Fairly strong comments coming in from Uday Kotak on the current state of stressed assets in the economy, the impact on government-owned banks, and why just government-owned banks? As he pointed out, sort of bad underwriting is ownership neutral. I think the private banks also have made some errors in large loans that they've put out. Also, a warning coming in from Uday Kotak there that don't take likely the kind of trouble or stress we're seeing in the SME space. That also has the potential to become a big problem at this point in time. So a dire warning there from a leading banker in the country. With that, that's all we have on First Word this morning. But of course, lots lined up for the rest of the show. We're going to talk about India's consumption story with Lalit Malik of Dabur India.
India's big success in the toll operate transfer or the TOT auctions with the chairman of NHAI, Deepak Kumar, and all of this after this break. But we'll focus on the day's trade as soon as we come back from the break. Stay tuned.
आइसक्रीम ये है डबल आनंद। पहला आनंद पॉलिसी टर्म के अंत पर मैच्योरिटी क्लेम का पूरा भुगतान और दूसरा आपके अपनों के लिए लाइफ कवर की पूरी रकम बिना किसी प्रीमियम के। LIC न्यू जीवन आनंद, आनंद ही आनंद।
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार, just working on my expansion plan.
फंडिंग का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
You need a lot of patience into the next industry cycle.
Short-term pains for long-term gains.
Buying is complicated. Selling is 10 times more complicated.
If making money for investors were an art form, these folks would be maestros.
Statistically speaking, there is likely to be a big drawdown sometime in the next 6-12 months.
Is it much more difficult getting stocks right now? I think that is the basic nature of investing.
Equity reflects the future earning potential.
Circle of competence, one of the most important concepts in investing.
Biggest risk that investor takes is when he pays the highest valuation at the highest margins.
Get in on a conversation on the art of investing with India's top portfolio managers on Alpha Moguls. Thursdays, only on Bloomberg Quint.
Welcome back. You're still watching Indian Open on Bloomberg Quint. Let's do a check of the Asian markets. It's been a quiet start. No major losses at least seen. Remember, the handover from the US markets were pretty positive. And the FOMC meet has also kicked off yesterday. We'll be getting to know at least tonight about the rate hike. Shanghai is currently trading with good amount of gains with 0.6% higher. Hang Seng, that opened quite positively in today's trade. That's also trading with gains of nearly 350 points as we speak. Pull up SGX Nifty and check how are our markets likely to open today. And SGX Nifty suggests it could open with a mild bit of positive tick of about 10 points. But talking about our markets, some bit of respite was actually seen in yesterday's trade. Finally, we closed in the positive. Let's check what sort of F&O cues we are getting from the internals that were received post the market close today. And Darshan Mehta joins us to take us through the same. Darshan, good morning. No major build-up for Nifty futures, but some bit of unwinding was seen for Bank Nifty, which was building up some fresh shots.
Yeah, that is true, because on the Nifty side there was a little bit of fresh long positions that were taken yesterday, but for the Bank Nifty continues to bleed. It was down in trade, so there was long unwinding that was seen. You can see the open interest was down almost 5%. Now, where are positions taken? I think 10,100 remains extremely important, because if you see, put writers are active at levels of 10,100. This is the first support level for the market. If that gets broken, the 10,000 is the next one. And if 10,000 gets broken, all hell will break loose. But nevertheless, 10,100 to 10,000 remains supportive. Put writers are call writers are extremely aggressive around levels of 10,100 to 10,200. So between 10,000 and 10,200 is the broad range, and 10,100 continues to be the most important factor in the market today. Now, what happened yesterday? Now, this is interesting, because yesterday call writers wrote aggressively even at the 10,100 level. They are hoping that the market falls, and put writers were not that aggressive at the 10,000 and 10,100. So despite the Nifty moving up yesterday, it clearly shows that, you know, the favor is still with the bears at this point of time. So if this gets broken again from 10,000, there will be significant amount of downfall that will happen. But if the market continues to rally, the rally will be very, very sharp, given the fact that people at 10,100 will have to actually shed positions. Now, in terms of PCR, the Nifty PCR was rather stable in trade. The Bank Nifty PCR fell down from 0.99 to 0.92. Stock specific, if you're looking at it, some of the counters in the F&O ban. So BEML comes out of the F&O ban. JSPL as well as IFCI are the two counters which come into the ban. So they are the new counters. So BEML probably will have a good day today. NIIT Tech, fresh buying was seen. Mid-cap IT, again, the rally seems to have continued. A high open interest build-up of 17% on the long side. Similar case, Hexaware, look at the open interest build-up, almost 13% on the long side. The other counters that were in focus, Interglobe open interest built up of 10% on the long side, so that was doing well. You had Tata Steel, which saw a huge amount of short covering. Open interest built up was on the 10% on the downside. And finally, you had Raymond, which also saw open interest decline of 10%, but there was enough short covering seen on the counter.
Okay, we'll watch out for each of these. Remember, yesterday we were talking about how important that 10,000 strike was. Close to or around those levels is when we've made a bit of a bounce. Let's see how sustainable it is.
In fact, Neeraj, now the 10,000 put strike has the maximum open interest of nearly 66 to 67 lakhs. So if we actually break that level, there'll be a huge amount of unwinding, which could drag the markets even lower. I'm just saying if we breach that mark. Yeah, but that was a case, I think, that we pointed out yesterday as well. Let's just wait and watch if indeed turns out to be true. The OI, as Navneet said, has indeed gone up. Let's wait and watch what happens during the course of the day today, or maybe over the course of the next few days. Today, the markets are likely to stay quiet ahead of the Fed meet. Let's get in Vinit Bolinjkar, Head of Equities Research at Ventura Securities, joins us right now on the show. Vinit, good morning. Thanks so much for joining in. A lot of comments coming in about how
Thanks for having me.
No, of course, pleasure having you. A lot of comments coming in about how during the last few days, weeks, months, stocks which hitherto were looking very, very expensive have now moderated and come to valuations which might seem attractive. The question mark only is it time to dive head on into well-valued stocks, or even if you are in the buying mode, you would space out your buying over the course of the next few weeks / months?
Yeah, so I think a long drawn-out process of buying is more advocated. See, one thing is what the market does not like is uncertainty, and political uncertainty is the biggest enemy of the markets. So right now, when there is indecisiveness regarding how JDU will act with the BJP and all, I think the markets will remain subdued. But having said that, technically also the market is looking a bit oversold. Globally also we have the Fed meet, so market might not give off until the next couple of days. We might trade in a narrow range. So it is advised that we do some bottom fishing, but space it out. Sectors to look at would be rice stocks, a little bit on the textile front, branded domestic plays, bit of mid segment IT, and select private sector banks.
Hi Vinit, good morning. Well, the markets today will be taking cues from the FOMC meet, which is already kicked off yesterday, and it's largely priced in, Vinit, that it could be the first rate hike of 2018 by FOMC. But I think what the street will be watching out the commentary, because in between there was that noise that instead of 3 rate hikes there could be 4 rate hikes. Let's just assume, because the expectation is still, the guidance which has been given is of 3 rate hikes. What sort of impact can it have on emerging markets like India?
Okay, so there would be an initial sell-off if the commentary was weak. But apart from that, I think these Fed hikes are most probably been discounted, and we wouldn't see too much of an impact on that. I would be more concerned with domestic outlook on downgrades of earnings and little bit of slowdown in the domestic side. So that would be a cause for concern, more than the FOMC commentary.
Okay.
Okay, we'll be watching out for that, the rate hike and the commentary when it comes today in the evening. But in the meanwhile, let's go across to our research team and find out which are the stocks that are going to be in focus when the market opens today. Whole host of stocks to keep an eye on. We'll also find out which all companies will be meeting different investors today. And we've got Darshan, Shraddha and Nikki here joining us. Good morning to 3 of you. Nikki, let me start off with you. Jindal Steel QIP kicks off today. Take us through the details of that.
So the base deal size is around 900 crore with a green shoe option of 300 crore. A net we're looking at a figure of 1200 crore. The last closing price for the stock was 233, while the floor price has been set at 227, which implies a discount of around 2 to 3 odd %. Dilution of equity would be 5.7%, including the green shoe option. Indicative issue price for this offer is around 225 to 233, and the proceeds are intended to use towards meeting working capital needs and also paying off operational and capital expenditure creditors. This is along with the repayment of long-term debts. Second in the list, we have Greenply Industry. There, the board of directors met yesterday and decided to explore the opportunity of actually demerging its division, MDF division, into a separately wholly owned subsidiary. It has also approved expansion of vinyl lines, which is at its existing unit at Gabon, which is South Africa. This division particularly contributed to around 29% of your overall revenues for 9 months ended 2017, and in terms of EBIT, the contribution was as good as 52%. Next in the list, we have Dalmia Bharat. Well, there is a fresh development happening in Binani Industries insolvency, Binani Cement insolvency case. The guarantee has been, performance bank guarantee has been provided upon by the company, which equals to the 10% of upfront payment which needs to be paid to the lenders. This is after the unit has been approved as chosen as a final bidder bidder by the Committee of Creditors. And finally, a list of a bunch of companies meeting analysts and investors. You have in the likes of Naveen Fluorine, you have Narayan Hrudayalaya, Balkrishna Industries, and also Jain Irrigation.
Okay. So I guess Binani Cement will keep having fresh developments every day. But Shraddha, what about you? What are you tracking?
Some of the other news, Navneet, 5 names is what I have. Ashoka Bilcon, they've declared the lowest bidder for 2 projects worth 448 crores. Then you also have Transport Corporation of India. They've acquired 1 ship for 49 crores to increase their presence on the west coast of India. Indigo will continue to remain focused, now apart from their ongoing issues with respect to the A320 Neo planes. There is a Financial Express report which says that Indigo will form a consortium with Qatar Airways to make a bid for Air India, so watch out for that name. You have Newgen Software, which has launched a new product or other new solutions for US health plans. And finally, Mercator, which will sell a vessel for $4.2 million. That's about 27 crores, mainly to be used to reduce debt, but you could see some positive reaction.
Okay, we'll be keeping an eye on all these stocks when the market opens. And Darshan, you've gathered some exclusive details with regard to Alkem.
Yeah, basically there's this US FDA audit that's happening at Alkem's Daman plant. What's interesting is it's a surprise audit. It's not a planned audit. So basically what had happened is in 2016 the US FDA had inspected their plant and they gave them 13 observation, and more surprisingly was that in December this plant even got cleared by the US FDA. So everything was right. Again, there is this audit basically relating to the quality control and production lines of the country, of the company. It's an important plant because currently they are trying to scale up the US business. US currently is 16% of their top line, and out of the 16%, 50% comes in from the Daman plant because a significant amount of their future pipeline, that is almost 50 to 60% of their future approvals, are dependent on the Daman plant. So this will go on till the end of the week, started yesterday. So it will be interesting to see what has happened, and all this is source-based information in terms of what we are asking. Alkem, we wrote to Alkem, they haven't responded to us. The US FDA says they do not comment, confirm or deny any kind of inspections.
Okay, thank you so much, 3 of you, for bringing in all those details. Vinit, I'm going to take the first stock that our research team discussed, Jindal Steel and Power. The metal stocks of late have been reeling under pressure, reason being the trade war, which was first triggered by the US administration. And I want to take your view on Jindal Steel and Power. The company has been making effort to reduce its debt, and this QIP is also a result of that, where they will be looking to, the 900 crore which they raised, some of that will be used to pay down their debt. What's the view on the entire space? Because stocks like Jindal Steel and Power and Steel Authority have been quite active in the recent past.
So as you said, Jindal and SAIL have been active. So Jindal and SAIL are essentially long-driven products. And more specifically, Jindal, which is a longs company, is not too much impacted by this US imbroglio. Although the prices are down, your iron ore prices have also come off very sharply. So to that extent, this company remains insulated, and it is our preferred way to play the steel sector.
Preferred way to play the steel sector. That's interesting. You don't foresee that stocks like SAIL or maybe even a Tata Steel could give a better bang for the buck compared to a JSPL?
See, JSPL is, we are an infra company. We are a company which is going gung-ho on infra projects, construction. And while we are building our country's infra, I think the long-only side will do very well. There is less threat of imports on that side. Specifically, imports, if generally they do happen, and the prices which go down are typically flat products. So given this scenario and its concentrated focus on long products, I think this is one of the slightly insulated stories on the demand front.
We always look at stocks which are moving up or having a good move. And yes, if a stock is at a 52-week low, it must be there for a reason. But Mahindra Holidays is an interesting name. For some time in between, it started revving up its revenues and bottom line numbers, memberships grew, and all was looking hunky-dory. Suddenly, the last 6 odd months, it's fallen off the cliff virtually and gone out of favor completely. What's happening here?
So actually, there is a lot of amongst customers and users of Mahindra Infra, Mahindra Mahindra Holidays. There is a lot of things that the facilities are not up to the mark. So we have heard stories of even people cancelling their subscriptions and all that. Having said that, it's in a very interesting space, will continue to do well, and these dips should be looked at to buy into,
Okay. Fair call, Vinit. Stay on. So much more to talk about. Lots of stocks in news as well. CDSL, there is a very stiff brokerage target that has come in. Greenply is mulling the demerger of the MDF business. I'm sure Vinit Bolinjkar has a couple of stocks that he would want to speak about as well. We'll do all of that in bits from now. For now, let's get in our 8:45, so time to dwell upon technicals and derivatives and trade. Chandan Taparia, Associate Vice President at Motilal Oswal, as well as Gaurav Bissa from LKP, join us right now on the show to talk about their thoughts on the markets and specific stocks. Gentlemen, both of you, good morning. Thanks for joining in. Gaurav, let's start off with you. This small bit of a bounce that we saw yesterday and the indication of maybe a 5, 10, 15 point uptick on the Nifty today. Does it give any kind of indications as to what trade could be? What is it that you will be telling your clients to do today, if anything?
Good morning. The couple of things that are looking quite interesting. One, a lot of people have been talking that we have broken the 200 DMA or we have broken the major support levels. But if you look at it, you're not seeing significant OI action happening in the Nifty or the Bank Nifty, which generally means that there has been some sort of price correction happening, but we are not seeing aggressive short positions getting built. The more interesting part, the second part would be from options. If you look at the option chain, for Nifty, 10,000 put option commands a very high concentration. If I'm not wrong, we touched upon levels of 10,060, 10,070 yesterday, but we did not see short covering coming in. Generally, this would have meant that people have not panicked. People who have written 10,000 put option, they have panicked, and now we can see levels of 9,800 or maybe 9,900. That was not the case. It generally means that people, strong hands are still feeling that there can be a bounce back coming in. I'm not saying it's a reversal point, but there can be some bounce back of 150, 200 points from the levels of 10,050, 10,100 levels. For Bank Nifty, 24,000 weekly put option had the highest concentration. Even they did not see any sort of short covering coming in. There was some writing that we saw at 24,000 put option. So both of these in conjunction indicate that there can be a bounce back that we can see at 24,200 or at 10,140, 130. I don't see there's a strong trade sort of. It can trade between levels of 10,000 on the lower end and 10,300 on the higher end. So I would play for a range bound trade. Any dip towards 10,050 is a lucrative buy, 50 points stop loss, 200 point target. At these levels, I would skip the trade. I would wait for a dip. I would write an option at this point in time.
Me too.
Okay, that's the view coming in on Nifty. But Chandan, do you share the same view? Do you expect a short-term bounce back that could be seen in today's trading session?
Yeah, good morning. My friend Gaurav has said everything about the OI concentration and the market setup, and I do agree with the same. Because even after the market decline, we have not seen any put unwinding at 10,100 and 10,000 strike. Or in fact, on day before yesterday, when market was falling down, the fresh put writing was happening at 10,000 and 10,100 strike. And that's why market yesterday opened negative and managed to hold 10,050 and bounce back by around 100 points from the lower levels. However, some weakness is visible in the Bank Nifty, but Nifty is giving an early sign of the bottoming process for a short-term point of view. Maximum put OI at 10,000 indicates that put writers are quite comfortable to even hold their put writing activity. However, we slip below 200 exponential moving average. But now if it again moves beyond 10,141, that is the previous swing made just 6-7 days back, then some short-term confirmation for the reversal would be there in the market. And in that scenario, I'm looking for an upside move towards 10,276, 10,333 kind of level. So market has been consolidating in this broader trading range and expecting the support to come near to the lower band of the range. We have seen a decline in volatility. However, VIX is hovering near to 15.5 level, but it has to cool down below 13.5. Then only the stability or a smooth ride will be there. We have seen put writing activity at lower level, but at the same time, call writing is also happening. So that is going to restrict its upside momentum. But as of now, I'll buy on decline by keeping the support of 10,000, 10,050 in mind, and holding about 10,141 will confirm an up move around 100, 120 points on the higher side in the Nifty index.
Well, clearly, Chandan, call writing on the 10,100 and the 200 strikes have been seen consistently, at least in the last few sessions. But let's also get some stock-specific ideas from our technical experts. Chandan, I'll come back to you. Stock-specific trading strategies?
Yes, some stability seen in selective pharma counter. Lupins and pharma are forming some bottom process. while Davis Lab is one of the strongest counter in the entire pharma pick if the price pattern is concerned. It has formed a pole and flake pattern on the lower degree chart. It is holding the gains even after the market decline, which is showing the inherent sign of the strength in the counter. It requires a small follow-up to start the next leg of rally. So expecting the same, this is why recommending to go long with a stop loss of 1070 and expecting it to hit towards recent swing high of 1142 to 1144 kind of level. Apart from that, positive on IT counter, we have seen buying interest in Hexaware, KPIT, Tech Mahindra, and TCS Infis also likely to attract buying interest. But here, as per the price pattern, KPIT is in a strong momentum. Trend is quite positive. The stock is again moving upwards after the consolidation of last 3-4 trading session. So expecting a fresh up move, one can buy with a stop loss of 224 and expecting an upside move towards 242 to 244 levels.
Okay, Gaurav, what about you? You also betting on one of the pharma stocks?
Yes, my recommendation would be on Sun Pharma. We have seen that the stock has given a good bounce from 500 odd levels, and there has been some short covering to tune of 3% yesterday. That's a good sign. If you look at option chain, 500 put option commands a very high concentration, the highest amount of put series, and that generally means that 500 is going to act as a strong support. There's a technical reversal pattern that is also seen around 500 mark. So there's a possibility of a small bounce back of 3-4% that we can see in the range. One can have a support of 503, 502, and buy Sun Pharma futures for targets of 525, 530 for next 2 or 3 days. Second would be sell on IOC. This is one name that has been making low, high, low, low. It's just trading around the crucial support levels of 174, 175. If it trades below these levels, there can be a significant fall towards 160 that can also be seen. For trading per se, one can have a stop loss of 177, 178, and one can play for targets of 168 to 167 that can be seen in 2 days.
Okay, and IOC was the top loser on Nifty yesterday. We'll be watching out for all those stocks that Chandan and Gaurav gave as their trading strategies for the day when the market opened. But right now, on to our special segment, Bloomberg Edge, where Jayesh Kilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Good morning, Jayesh. What's on your radar today?
Morning, Navneet. So I'm watching out for Jubilant FoodWorks. That is because the analysts have a price target which is 10% higher from where the current price is, and also Bloomberg's proprietary fear and greed indicator that has turned positive and indicated a buy signal. First, let's have a look at how the fear and greed actually works. Well, it's a Bloomberg proprietary indicator, and it uses a spread of 2 weighted moving averages of true range as one of the key inputs for calculation. And because it oscillates on a zero baseline, it becomes very simple to interpret as well. Simply follow the color and you'll get your buy and sell signals. Green is indicative of buy and red is indicative of sell. So going to the chart of Jubilant FoodWorks, what we have seen in the recent couple of months is that the stock was consolidating near the 2000 range, and it seems to have broken above the 2100 level as well. And the bottom panel, you can see the fear and greed indicator, and the last bar that you see, that is a green one, which suggests that there could be a buy signal going ahead.
Jayesh, efficacy of this?
Navneet, efficacy is about 50-50, but the trades that you get positive, return potential would be about 60% on that.
Okay, Jayesh, thanks a lot for bringing in all those details. I'm going to take that stock forward and take Vinit's view on that. Vinit, Jubilant FoodWorks, off late, a lot of technical analysts have also been talking about it, but what is the fundamental view? This is one stock which on YTD basis has also outperformed. It's up nearly 20%. And if anything is to go by, the kind of measures that the new management has taken, it's actually paying off, and that was clearly visible in the December quarter and earnings when the same-store sales growth was nearly 18%. I know the valuations have historically been sky high for a stock like Jubilant FoodWorks, but do you think there's any value left for somebody who's already invested into this stock?
I think there's a good 15 to 20% upside if you were to hold on for a couple of years. The invigorated sales data seems to suggest that the management has got its strategy right, and we could see a better improvement. I personally have been I have re-emerged on the Domino's calling list, and I find their products to be quite succulent and enticing to have me call them up a couple of more times. So given that a lot of sentiment around consumers has changed for their products, I think the same-store sales growth will continue to grow.
Vinit, anything in the recently listed space or the companies which have just come out with an IPO, subscribed or otherwise, have you guys come out with a note or you guys must be bullish on?
So I think going back a little bit, I think there's one company called Salasa Technologies, which had come out last year with an IPO, which is what we like. The stock is quoting around 325 odd levels, and there is good traction in terms of order book building up from the telecom and the electrical segment. And we see that this stock can be an outlier in terms of performance. It's a cheap stock. Valuations are very, very comfortable with earnings growth visibility being very high, both in the medium and the long term.
Well, talking about IPOs, it's the third defense IPO to hit the street today. The third state-run company as well, and Mishra Dhatu Nigam's IPO, I think opens for subscription today, and Samit Sarkar is here to give us a sense of what the company is all about.
So we can also call it Midhani. That's the short form of Mishra Dhatu Nigam. So the company is looking to raise as much as 438 crore rupees. Now the complete IPO is an offer for sale where the government will be selling stake. The price band is fixed at 87 to 90, and at the upper end of the price band, that is 90, the company will be valued at close to 1700 crore rupees. Now, the company is one of the leading manufacturer of specialty steels and super alloys, and it is the only manufacturer of titanium alloy in India. Now the company caters to a very niche product in India, which accounts for nearly 1% of the global steel products. But the demand for these products in India is expected to grow in the range of 4 to 9%. Now, for specialty steels, the demand is expected to grow at a compounded annual growth rate of 4%, while that of super alloys and titanium alloys at 9% and 5% over FY16 to FY21. Now, if you see, it's a Miniratna status company with only one manufacturing facility so far in Hyderabad, but the company is looking to set up 2 more facilities in Rohtak and Nellore. Now, as the company has only one facility in Hyderabad so far, the financials of 2018 were impacted because the facility was shut down for maintenance purpose. As of January 2018, the company's order book is close to 517 crore rupees, which constitutes mostly of defense orders. The defense order are around 55% of its order book, while 32% is from space sector. Similar is the case in the revenue. For financial year 2017, the company's 72% of its revenue were from defense, while 22% was from the space industry. So you can see clearly most of its revenue is from the defense and space industry for the financial year 2017.
And how are the financials stacked up for this?
So if you see, the company does not have any peer, and if you see on the profit and loss side, the company's revenue, net profit and EBITDA grew at a compounded annual growth rate of 20%, 16% and 24% over FY13 to FY17. But for the last 2 years, the growth rate was a bit muted for the company. On the balance sheet side, the company's book value per share stands at 39 and cash value per share at 14 rupees. It also has a small portion of debt that is close to around 65 odd crore rupees for the first half of financial year 2018. Now on the return ratio side, the return ratios were a bit muted. Return on equity at 7.4%, return on capital employed at 7.8% and return on asset at 4.4%. On the valuation side, on an annualized basis for FY18, the price to earnings works out to be around 30 times. Market cap to sales at 4.1 times and EV to EBITDA at 16.5 times. Lastly, on the brokerage side, now brokerages are divided on this IPO. Angel Broking has a neutral rating, while ICICI Direct has an avoid rating. Now, this is on the back of the slow growth in the last 2 years when it comes to revenue and net profit, and because of its undersized order book. Now, the company's order book is close to 517 crore rupees, which is just 0.6 times its FY17 revenue. While Centrum Wealth and Prabhudas Lilladher have a subscribe rating on this IPO because of the strong outlook on the defense and the space sector.
Just wondering, Samit, one quick word. The revenues have grown 20% CAGR, EBITDA is 24%, yet the net profit growth has not been great. Is it because of higher debt cost?
No, it's not because of the higher debt. That is a very small portion on the books. It's because of the fluctuations in the raw material prices. That's quite normal for them. But if you see in the last 2 years, the growth rate was not that good. It's just because it's FY13 to 17, the CAGR growth looks good. But over the last 2 years, the growth rate was like muted, very muted for the last 2 years. And you can clearly see that on the order book side also. The order book is just 517 crore rupees as of January.
And it's all government orders, if I'm not wrong.
Yeah, all of them government orders.
Okay, thanks a lot, Samit, for bringing in all those details. That's the new IPO which is hitting the markets today, but we're about to get the pre-opening rates. The SGX Nifty also inched a little bit higher in the last 15 to 20 minutes of trade. Currently, SGX Nifty is quoting around the level of 10,180, and remember the 200-day moving average is somewhere about 10,165. So if we can surpass that level and close above that, that'll be some positive takeaway at least from today's session. But the trade is likely to be cautious on back of the FOMC meet. We'll be just getting the first rates, pre-opening rates 60 or 100 points higher. Remember, these rates will settle in a while. By 9:08, you will get a clear indicator as to from where the markets will open today. Sensex currently trading with gains of 170 points. Let's do some stock-specific check. HDFC is showing some wild ticks in the morning, 10% higher. Kotak Mahindra Bank is also showing some major uptick as we speak, but they will settle down in a while. Tata Motors, that's the stock actually which has been under pressure in the recent past, trading around its 52-week low mark. Some bit of respite at least in the pre-opening rates for that one. On the losing side, Dr. Reddy's Laboratory is showing some bit of pressure in the pre-opening rates. Eicher Motors, this was pretty active yesterday. The counter was up nearly 3%. That's witnessing some bit of a cool off at least right now. Lupin, IndusInd Bank are some of the other stocks which are showing mild bit of negative. And these are all the Nifty constituents, but I just want to pull up Jindal Steel and Power. That's the stock which is going to be in focus as the QIP kicks off today, 0.5% higher. Remember, QIP rate was at a discount of nearly 3% to yesterday's rate. Pull up Greenply, that's going to be in focus as the company is mulling to demerge its MDF business. So these are the stocks which will be in focus. So Greenply currently showing an uptick of nearly 1%, and as we speak, Sensex has slipped into the red with cuts of 28 points.
A couple of stocks which were very active in trade yesterday. Reliance Infra should come up on your screen. Extremely active in the session yesterday, as was Marico. And let's see what these stocks are doing in the pre-open session currently. I think precious little. Marginally higher is Marico, not too much otherwise. Mahindra Holidays, Cummins India were among stocks that were hitting fresh 52-week lows yesterday. Just want to see what those are up to. No great moves here. Two stocks on which maybe, actually Navneet highlighted Greenply already. I'll just pick up CDSL once. HDFC has come out with a report and a target price which is substantially higher, stiffly higher. Just no impact at all on CDSL either. And last but not the least, the currency should come up on your screen, 65.23. So moving in a very, very tight range the last few days. The day-end movement is, or rather day-end close is 3 or 4 paise above or below what the previous close is. And today the start is no different. Extremely flat is the currency. Okay, before we move any further, let's get in Samit Sarkar, who just joined us and spoke about the IPO, but now jumps into it with the big brokerage calls for the morning.
So on the big brokerage calls for the day, first we have is HDFC Securities on CDSL. Now the brokerage has initiated coverage on the stock with a target price of 425, which suggests a potential upside of 50%. Now according to the brokerage, CDSL is a gem of a business that any investor constructive on India for long term must own. Now the depositor business is a proxy for growth in capital market, and there is limited scope for any other depository to be set up in India. Now CDSL has a diversified business revenue stream with high component of annuity revenue, which gives a good revenue visibility for the next few years. And the company has also been gaining consistently market share from its only peer, that is NSDL. Now and going forward, now the brokerage is expecting the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 22%, 28% and 20% over FY17 to FY20. It is also expecting the EBITDA margins to expand to 64% by FY20 from 54% in FY17, and this is on the back of its fixed business model that the company has. Lastly, it says that CDSL has consistently been paying high dividends, and this is expected to go up going forward because of the high cash balance that the company has on its book. The second we have is ICICI Securities on Dr. Reddy's. Now the brokerage has upgraded the stock to add from hold, but has cut the target price to 2,378 from 2,487. Now the brokerage has upgraded the stock on the back of several triggers like the key launches and planned clearance, which will revive growth and margins over FY19 to FY20. Now the U.S. revenue run rate is likely to bottom out in FY18, but price erosion is likely to remain in double digits in financial year 2019 due to potential competition for its two large products, says the brokerage. Now, the brokerage says that the several drivers in place will offset the price erosion and drive US sales going forward. It has also reduced the target price to factor in the delay in the launch of its timeline of generic product, that is Copaxone, and because of the continued price erosion in financial year 2019. Lastly, it says that any successful outcome of triggers may lead to a valuation re-rating for Dr. Reddy's.
Okay, Soumit, thanks a lot for bringing those big brokerage calls for the day. Vinit, just coming back to you, any view on stocks like CDSL and BSE too, which has slipped below the IPO price? I remember the listing of both of these stocks were good, but post that there has been some selling pressure.
So CDSL in our estimates is about going to earn about 13 rupees, 12.7 to be precise. And at 283 rupees when we had initiated, our price target was around 292, which is about 25 times. Now it all depends on what is the multiple you want to give it. So when people are looking at the broking space, which is typically cyclical, and AMC business, which is largely impacted by your flows, to that extent CDSL becomes a much more protective play, and there we could see the valuation re-rating pan out. So if you are optimistic that the stock would get re-rated, then that would be the play. But as far as our estimates suggest, that we do not expect earnings to be far higher than 13 rupees per share for FY20.
Okay, and CDSL issue price being 149, so definitely that had a bumper listing, and the stock still trading with around those levels of 287. It's actually the stock of BSE which has slipped below the IPO price. Let's bring in Deven Choksey of KRChoksey, who joins us on the show now. Hi Deven, good morning and thanks a lot for joining us today on Bloomberg Quinn. What's been the reading, Deven, on the markets? What are you doing currently or advising your clients? Are you using this opportunity to buy, or are you just sitting out right now?
Yeah, good morning and thank you for having me on the show. Well, I think there is no question about not looking at the market in proper manner today. The bull market typically has such kind of corrective phases at which we are experiencing currently. Reason can be anything. According to me, I think on one side, if you look at the market, the earning clarity has emerged much stronger than what it was before. In fact, in last 2 or 3 years, I think we have always been wanting to see this kind of earning clarity, which the companies have now started producing since last quarterly results. And my take is that I think in this quarter the results are going to be far more better than what we have seen in earlier quarters. So if we take another 4 to 8 quarters from now, we see a clarity in the earning growth, and this earning growth clarity could be twice the GDP growth. That means I think suppose if the GDP growth is 7.5%, earning growth could be easily 15% and above. So that is one area where we feel distinctly confident about, and we feel that I think this is a reason for which one should not be ignoring the market and buy the market when this kind of opportunity is available. At the same time, there are headwinds on the macro side and the global side as well. What we are seeing on the political front in India, I think is also giving a very nervous picture, because I think when all the opposition parties come together, I think that is where I think you find a little bit uncomfortable that is it for a good cause or is it for the convenience cause. In such kind of a situation, I think you remain slightly skeptical also at the same time. However, I think our approach remains very simple. I think go stock specific, keep an eye on individual stocks and the merits therein. There are opportunities available in different pockets, and probably I think that is something which we feel more comfortable about. We can talk about those opportunities, but our approach remains stock specific in this kind of environment.
I think that's a conversation that we will want with both Deven and Vinit Bolinjkar about opportunities that exist as well. Just wondering, Deven, one quick word, and then we'll also dwell on the technicals for a bit. But road construction companies, Ashoka Buildcon, for example, winning consistently orders. They won the first TOT order as well, or at least are contractors for the same. Now L1 in another set of orders as well. This space is heating up. Ashoka Buildcon itself is looking very good. If you track Ashoka Buildcon individually, and if not, what within the construction space do you like the most?
So, good morning, Neeraj. I'll talk a little bit in general because we don't track this particular company per se. However, I feel that the important opportunity is on the way for most of these companies, including likes of Larsen, where you are seeing a rapid activity happening in the construction space, infrastructure space, road construction space, as we call it as. And over there, I think we are seeing the larger role to be played by some of the very large companies particularly. We feel confident about this space, except the fact that the financials probably are not as convincing as I would like it to be. No doubt about the business coming in the favor of the road developers, the construction companies. However, the margins remains quite tight given the kind of competitive bid pressure that they have, and that's where the art of execution will come and play a role. I'm not too sure, other than infrastructure companies or other certain investors who are looking at infrastructure companies like the pension funds, the insurance funds, endowment funds, anybody else would probably be very excited to buy those companies where the return on capital employed ratios probably remain slightly under compared to the other places, where you are getting better ratios available on that side. So that is the only reservation, not doubting about the business possibilities, but the fact that the return on capital employed ratios remain far more favorable in other space, other sectors vis-a-vis the road construction companies and the sector therein.
Okay, stay on, gentlemen. So much more to talk about, but 4.5 minutes left to trade. Let's first tell you all that you need to know to stay ahead in session before we move back to Gaurav, Bissa and Chandan, Taparia as well. Here's all that you need to know to stay ahead in trade. Dalmia Bharat has provided bank performance guarantee equal to 10% of the upfront payments to lenders in the Binani cement deal. It promises to be an interesting case going ahead.
Greenply Industries mulls demerger of its NDF business. Also, the company's board approves expansion of veneer line at Gabon factory.
Mishra Dhatu Nigam IPO opens today. Issue price set at 87 to 90 rupees per share.
Naveen Fluorine, Narayana Rudalya, Balkrishna Industries and Jain Irrigation to meet analysts and investors today.
HDFC Securities initiates coverage on CDSL with a buy rating and sets a target price of 425 rupees a share, indicating a potential upside of 50%.
And ICICI Securities upgrades Dr. Reddy's to add with a price target of 2,378 rupees.
That's the set of stocks that you need to keep an eye out for. But as the pre-open rates have settled, just looking at the large cap space, Bharti Infratel arguably looking like the stock that will start off on a positive note as the top gainer. And it's been active for the last 2 or 3 sessions. Gaurav, Bissa, any thoughts here, Bharti Infratel, from a trade perspective?
Well, it has been trading in a range. There's a lot of resistance that we are seeing at 347, 348 zone. There was a time in the beginning of the month that we saw a good amount of long positions getting built from 338 levels to 348. But I would not be a buyer here. Let it cross and sustain 348, 350. Then we can look towards levels of 365, and the stop loss can be 343, 344. At 344, I don't think it's a compelling buy.
Chandan, I don't know if you gave a pharma name as an idea or no, but yesterday, out of the clutch of pharma names that went up, you've given one stock idea. What about Sun Pharma individually?
Already, Gaurav has given buy on Sun Pharma, and the stock is multiple support near to 500. Put writing is also visible at 500, and this is multiple support on the daily, weekly, and monthly chart. So likely to respect. And yesterday it formed a bullish engulfing pattern on candlestick on daily scale, so which may take it to 500, 29, 30 kind of levels.
Chandan, most of your PSU banks are showing a positive take in the pre-opening rates. Bank of India, IDBI, Union Bank, Syndicate Bank. Anything from this space? If the market recovers, there could be a short covering bounce, and if you could take a trade?
We require some stability in the PSU banks. However, most of these stocks are consolidating from last couple of trading sessions, but follow-up is missing, and that is required led by short covering. So if you want me one name, that will be the State Bank of India, because compared to the stock is the safe, and it has seen the multiple support near to 245, and in fact at the time of this recapitalization, the stock started its journey from 242. So 242, 240 will be the major support, and the stock has potential to head towards 260 kind of level if the bounce back or short covering happen in the counter.
Vinit, Bolinjkar, just a quick thought here. Are you buying any of the PSU banks? A quick 30-second view here.
Not really. Still wait and watch. We would like the dust to settle more. I think Q4 is going to be a very bad quarter for most of the banks. SBI may have guided that it will be better than what analysts expect, but we'd rather have the proof of the pudding than buy into it.
Okay, let's get one top call for the day from both our technical experts. Gaurav, over to you. Looking at the pre-opening rates, your top call would be?
Well, I had a strong buy on Sun Pharma. It's open with a gap, so I would now shift to Analytech among the IT space that is looking quite robust. One can have suppose of 908, 909 on the upside, buyouts of 940, 945 can be seen.
Okay, NIIT Technologies is the top call from Gaurav. Bissa. Let that stock come up on your screen. This is his top call for the day today. 923, he's recommending this one. Chandan, what about you? Your top call?
I have two trade, Divis and KPIT. So KPIT can be taken as a top trade. KPIT has potential to move towards 244, has a stop loss of 224.
Okay, well, both our guests betting on mid-cap IT. Let's wait and watch what happens to that space today from a trade perspective. Gentlemen, stay on. Some more questions once the market's open, but here's the market open for our viewers this Wednesday morning. After the pickup that we saw, a small pickup that we saw yesterday, let's see if it's percolating into a session today or no. Well, that's a strong one, 0.5% upside for the Sensex and the Nifty. The Nifty Bank is the one which is revving this up about 0.75%. Let's wait and watch if this holds or no. The start is extremely strong. Let's look at the mid-cap end of the market too. That one too bounced back in the session yesterday, and for now about 0.75% for the mid-cap index, about 0.5% for the BSE small-cap index. Not a bad start, I must say. The advanced decline should be positive, and the heat map will show you there's a fair bit of green on the screen. In fact, it's a sea of green and some interesting names moving around as well. No big losers, that's the key thing. Look at the top 5 losers, none of them down over 1%. So that's the first key thing. And then check off what the gainers have done. Some banks have moved back, naturally so. The likes of Yes Bank, Axis Bank, I believe Kotak Bank somewhere there too, which is not doing all that poorly. So private banks have come back. SBI is in the green, about 1.5% higher. And the commodity names, Vedanta, Tata Steel, etc. are doing okay. Hindalco too, up about 1%. So commodities and banks, essentially the two key sectors which are doing okay, and IT is not doing all that bad. So the three heavy sectors doing reasonably okay for themselves. Very quickly, some specific stocks that I want to highlight before I hand it over to Navneet. 2 or 3 pockets, some of strength, some of underperformance, and let's try and see what they are doing today. Firstly, some of the top gainers of yesterday's session, they're starting off mildly positively. At least JSPL and Marico are starting off on a positive note. Can't say the same for Reliance Infra, but a mild tick of green for the other two. A couple of stocks in news and brokerage calls that have come in as well. So Greenply, they may undertake the demerger of the MDF business. That stock is starting off 1.25% higher. There is some strength that we're seeing there. Some strength in CDSL as well, 3% higher. HDFC Securities note, which gives a 50% upside to CDSL, and that stock is starting off on a good note. Last but not the least, stocks which are near the 52-week lows or trading at 52-week lows yesterday are also starting off with a mild bit of green. So not a bad start for the markets by and large. About 0.6%, and the Nifty Bank is only strengthening. Navneet, what are you spotting?
Well, it's all about the banks. In fact, the Nifty PSU Banking Index is the top sectoral gainer, at least in the opening rates. Let's just pull up the Nifty PSU Banking Index. That's trading with gains of 1.5%. The wicks too have cooled off, so it's a good opening, I would call it. Stock specific, the list is being dominated on the upside by these PSU banks. So IDBI Bank is up 3.5%. Bank of India is also up 3.5%. Syndicate Bank is doing well. Besides the banking counters, you've got Wellspin India that's doing well. Max Financial has seen gains of 2.5%. Oil India, that's up 2%. And well, once again, it's Indian Bank, or you call it Syndicate Bank. All of them have seen positive ticks. Pull up Mindtree, Hexaware, and also stocks like NIIT Tech. Remember, they were the ones which bounced back in yesterday's session, and the buying spree continues for all of them. Hexaware is trading with gains of 1%, Mindtree 2%, and NIIT Tech, which saw some fresh long positions in yesterday's trade, is continuing in today's session as well. Whereas on the losing side, we've got PNB Housing, no major losses actually. On the downside, it's curtailed to about 1% or lower than that. PNB Housing is down 1%. GSK Consumer and stocks like HUL and Eicher Motors are seeing some bit of weak trade. But in terms of stocks that are in news, let's just pull up Alkem Laboratories. Darshan a while back reported that a surprise visit at their Daman plant was seen by the US FDA official, and Alkem Laboratories is actually actually seen gains in the opening session of almost 2%. Besides that, Jindal Steel and Power, that's the new one in the F&O ban in today's trade, and also because of his QIP, that's going to be in focus. So that one's showing an uptick, not an uptick, but just around a mild positive tick as we speak. IFCI is the other one, which is the new one in the F&O ban, so that too could be in focus. And BEML, remember, this counter surged just in the last 5 to 10 minutes of trade yesterday. It's up 3.5%, and it's also out of the F&O ban, Neeraj.
Yeah, so a clutch of names looking good out there. Final thoughts from our technical experts before we continue our conversation with Deven as well as Vinit Bolinjkar. Gaurav, Bissa, 4 minutes into open, the markets are looking robust. Anything that pops up on your screen, any thoughts that you have on the benchmark indices trade?
Benchmark indices, I would still be skeptical because we have opened on a gap up note and we are not just about the directional levels. 24,500 is the bank nifty resistance. It can move another 40-50 points, but that would not be a lucrative trade. PSU banks would be on my radar, so we have just recommended Syndicate Bank, likes of OBC. When Union Bank looks quite robust, I would be more so keen in PSU banks. Any small adjustment also can be a lucrative buy.
Okay. Chandan, what about you? Any thoughts on either the markets and if anything else that has popped up on your screen?
Yes, expecting the positive stance to continue now till Nifty holds about 10,141. We have potential to head towards 10,276 kind of level in next couple of trading sessions.
Any stock that pops up on your screen, gentlemen? Chandan?
We already discussed about the KPIT.
Okay, so you're sticking to that.
Target to hit very soon.
Okay, you're sticking to that. Cool.
Okay, I think we're inching very closer to the 10,200 mark in trade. So the gains are only building on 70 points higher for Nifty right now. And remember, we're now above the 200-day moving average of 10,166. I want to pull up some stocks. Kohinoor, a rice maker, that's doing well. That's trading with gains of 6.5% as we speak. And you've got Future Market Network. Remember, this counter had not had a great week so far, and the reason was because last week it surged quite significantly. So today's opening rate has been good for Future Market. That's trading with gains of nearly 8%. But Deven, coming back to you, you were talking about stock-specific trades or other pockets, which according to you, where you find value as the valuations have corrected from the top. If you could discuss few stocks that look attractive.
So I think the conviction level remains high in the commercial vehicle space, and particularly I think the neglected one, which is Tata Motors, for whatever reasons. I find that I think majority of the issues probably pertaining to the JLR related margin issues are probably discounted in the price, and the stock is available at a relatively comfortable valuation, I must say, along with Ashok Leyland, where the opportunity remains I think quite high, including where the transportation sector, particular for passenger vehicle transportation sector in the commercial vehicles, whether it is buses, electric buses, businesses, is picking up I think very smartly for both these companies. This one sector and the companies therein, we remain comfortable. We also remain comfortable with the housing finance space within the NBFC spectrum, and where we believe that I think they would continue to grow 25% kind of a credit growth in coming up period as well. So that is where I think the consolidation drive also being seen, like Canfin Home being bid by the NBFCs of the world, and probably I think we are likely to see the similar kind of a situation I think with other housing finance companies. So HDFC remains I think a relatively safer bet in this kind of a volatile market as I see it from investment perspective. Electrical goods and equipment segment remains very comfortable for us for investment, and that's where I think we like companies like ABB, where the order book position has started increasing because of the higher amount of rollouts taking place in the transmission and distribution space, and also in the electrification drive happening in the railway space. So I think this is one area which we find comfortable. Some of the mid-size IT companies within the spectrum, where I think they're connected with typically I think the industry like automobile, say for example autonomous vehicle, I think the companies like Tata Elxsi, companies like KPIT, which is getting split into two parts, I think they are available at a relatively attractive proposition. So yes, we can spell out a lot of names, but the fact is that I think it's a market which gives you opportunity with selective companies within the broad spectrum of the activity that we are into.
It's interesting. Vinit, since everybody's talking about mid-cap IT, a lot of naysayers, a lot of people who are negative on IT too have changed their stance recently. I've seen a couple of sell-side notes as well. What's your stance on mid-cap IT, and is there a bet that you're telling some of your top clients to take afresh in the mid-cap IT space?
So while we are not recommending mid-cap IT very aggressively, one particular stock that comes to mind is Mastek. I think it has been gaining grounds, improving margins, and they've done smaller acquisitions also. And they have a lot of cash on their books too, with investment in Majesco. So that is a very interesting play, and requires further delving. So that is one stock which is on my radar right now.
Okay, you're not going out and buying it. The reason I'm asking this is because the stock has had a bit of a rally already, Vinit.
I think there is a lot of play remaining out there. The company has got its act together. If you believe in the Majesco story, I think with Majesco being carved out as a separate subsidiary, separate listed entity, there's more focus now on the software services business. And I believe that there's a lot more to come out here.
Interesting. Deven, any thoughts on the rice companies? I mean, the largest one has corrected quite stiffly from the recent highs that it clocked in. I think they're a bit concerned about the higher MSP and how the exports might become a bit uncompetitive. But it's a pocket that has withstood the test of time. Do you like this space?
Well, Neeraj, I think for good reason, we have probably, I think, stayed away from this particular space, which is also including the larger amount of dependability on various factors, including the rains and the monsoons. But as you rightly said, I think this sector has withstood, I think, the kind of volatility which you have in the area of activities that they are operating into. However, I think the confidence level is not remaining as high for adding them or looking them into the portfolio. We rather focus more on through the food product segment of the FMCG company, where the likes of Britannia, Nestle, or even for that matter ITC, I think, have a bigger role to play. We believe that I think these are the areas where probably you could get easily around 22 to 25% kind of a earning growth opportunity from your investment on a yearly basis, if your investing or investment horizon is 3 years and above. So I think certainly, I think we like such kind of companies for investment vis-a-vis, I think, the pure play rice company which you mentioned just now.
Deven, not sure if you've taken your view on the PSU banking space, considering the sort of correction that we've seen, and finally a bit of bounce back has been seen in today's trade. Anything that you're looking to buy from the banking arena, and especially the PSU banking stocks?
So purely on the basis of numbers, if you look at, I think their valuations looks attractive on paper for sure. I'm not doubting that part of it, and we are mindful of the situation that they are looking attractive on paper. However, on the other side, if you look at the practical aspect of the business, I think you find that I think there are many things which are not working right. One of the things which is not working right is that these PSU banks, they don't offer the kind of clarity which the other banks would offer to you as far as I think their business outlook is concerned. Every 3 years the management would change, and as a result of it there would be some kind of a change in direction happening. That is not giving comfort. They do have the potential to monetize the assets that they have built in form of subsidiary businesses that they have created. I guess I think that's a time where they could possibly start encashing those businesses, like even PNB Housing can go and get out of the fold of PNB. SBI could, I think, offload some of the businesses. So these are some of the possibilities which one can probably count on. But beyond that, I think you don't get the visibility of this space. I would rather think that post-election, when they really start working on the consolidation drive in the PSBs, at that point of time, I think there would be a good opportunity. But at least coming couple of quarters are likely to remain tough for the companies, including for the results that they would be coming out with. So from that perspective, we keep a watch, but I think not immediately adding into the portfolio. So I must say that SBI kind of a company has been in our portfolio, and we continue to hold for the potential that it provides.
Okay. Deven, take a moment to thank you for joining in today and giving us that perspectives or your perspectives. Much appreciate your time.
Thank you.
Before we thank you, we haven't asked you about a stock that you would want to recommend. What is it that would form a part of your top investment list?
We are recommending Infrasoft Technologies. Recently, we've come out with a buy note on that. We believe that the company can easily double revenues in the next 2-3 years, and it's a proxy play on Amazon. You know, they are a purely U.S. geographic-centric business operations. They have a moat around the business, and they are among the top 25 sellers on Amazon. So with these kind of business attractiveness, I think this company can go places in the next 2 to 3 years where e-commerce is expected to boom further. So this is one stock that we like. Another stock, as you talked about the rice space, I think LT Foods has got its act together, and with its capex plans already through, I think that offers a very interesting perspective to get in. I think on a FY20 basis, the stock is available at a single PE. So, sorry, at about 14 times, you know, compared to the heady valuations of KRBL. And that is another stock that I like.
Okay. Interesting names that we, of course, spoke to Intrasoft about 2 or 3 days back when Ventura came out with the note as well. And you can hear that discussion on our website too. For now, though, take a moment to thank Vinit Bolinjkar for joining us today and giving us his thoughts. Vinit, much appreciate your time. The markets looking buoyant, over 0.5%, so steady for the first 15 minutes of trade. Let's see if this lasts during the course of the day or no. We take a break on that note, come back and talk about Indian consumers' shift towards Ayurvedic products, and more importantly, after a very robust December quarter, how has Q4 looked like? Lalit Malik of Dabur joins in to talk about that. And we talk about NHAI's big success with the toll operate transfer auctions with Chairman Deepak Kumar.
job, अरे 5 to 9 job, भाग दौड़ all the time job, the roaming वाला job, the deadline वाला job, or are you living in the market वाला job?
Life is full of options. Choose a job and earn on your own terms. Choose to become an LIC agent. It's more than a job. It's career insurance. Be your own boss. Be an LIC agent. Ab life set hai.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
You need a lot of patience into the next industry cycle.
Short-term pains for long-term gains.
Buying is complicated. Selling is 10 times more complicated.
If making money for investors were an art form, these folks would be maestros.
Statistically speaking, there is likely to be a big drawdown sometime in the next 6-12 months.
Is it much more difficult getting stocks right now? I think that is the basic nature of investing.
Equity reflects the future earning potential.
Circle of competence, one of the most important concepts in investing.
Biggest risk that investor takes is when he pays the highest valuation at the highest margins.
Get in on a conversation on the art of investing with India's top portfolio managers on Alpha Moguls. Thursdays only on Bloomberg Quint.
With Indian Open right here on Bloomberg Quint. They say that a good story is always worth revisiting. The last 18 odd months have all been about how Ayurveda and Ayurvedic products in the FMCG space have had an onslaught, are the new buzzwords in this pocket. Be it a player that has risen from the ashes, so to say, and be it some of the existing behemoths which have withstood that competition, and not too many have done that. There is always a story in that conversation. But the bigger reason why we have the next management on in Open today is the kind of quarter that they posted in the October, November, December quarter. Their businesses straddle across continents in the domestic area and the international area as well, and post such a strong performance in the December quarter. Whether or not the Indian consumer has stayed on course in the quarter gone by, and how is the outlook looking like for calendar year 18. So much more to talk about, with the management of Dabur. The company's CFO, Mr. Lalit Malik, joins me right now on the show to talk about all that and more. Mr. Malik, good having you. Thank you so much for taking the time out. As I said, there are some multiple points on which we can talk about. A recent consumer analysis firm did a conference with a brokerage and said that rural has been outpacing urban since the last 5 quarters, and that has only accelerated as well. So lots more to talk about with you. But let's start off with what I thought was the key point for Dabur as a company. I thought Q3 stood out because of the fabulous volume growth numbers in the domestic business. You could argue, some people would argue that it was on the base of the demonetization quarter as well, and which is where I wanted your perspective. How is Q4 looking like until now? We are almost at the fag end of quarter 4 as well. Has that lived up to expectations that you would have had at the end of quarter 3?
Sure. So I think first to talk about quarter 3, as you rightly said, it was based on the low base of demonetization in 2016. However, it has seen the bouncing back post GST business getting stabilized. So these two elements have reflected in terms of the strong growth that we posted into quarter 3 for India as well as international. When we look at quarter 4, I think it is a comparable base. The business has come back to normal, and therefore the impact of GST is now normalized, I would say, to a very major extent. And now we will see the comparable growth that will come in quarter 4, and also then going forward again in quarter 1 next year, we will see that there will be again a base impact of GST, but then really quarter 2 next year will be the one which will see the comparable in the post GST scenario.
So pray tell me, Mr. Malik, a lot of people talk about tax collections in this way, in that there was GST disruptions, and yes, the numbers are not predictable, but going ahead, maybe Q2 FY19 onwards, for the foreseeable future, the numbers will only pick up. Do you foresee such a scenario into the businesses that you are in as well? Does GST, in that manner of speaking, aid the organized formal chain in the FMCG space in a meaningful way? And post the disruptions and the base effects getting over post Q1, do you think the runway is large and will be fast clipped for the first 2 or 3 quarters for the organized players such as yours?
Certainly, I think I will say that GST has been a very important transformational reform, and in such a large reform you would always expect some teething problems, and which is what we all experienced. Going forward, when we will see things will get normalized, GST process will get stabilized, and also importantly e-way bill, which is going to commence from 1st April, hopefully will get stabilized. So keeping that in mind, in the medium to long term, GST will certainly benefit the organized sectors, and we do see the benefit of it coming back starting from quarter 2 next year.
Will it be bunched up at a faster clip in the first 2 or 3 quarters? I mean, will we see kind of evidence of that, that suddenly there is a big spike in either operational metrics or, you know, the formalization resulting in higher sales immediately in quarter 2, quarter 3 of FY19?
Well, I would say that, you know, it will not be a very big jump or any radical change. There would certainly be a gradual, because especially in FMCG sector, the demand doesn't go up or down in a very drastic way. It certainly has some impact on the base, which is what we saw in quarter 3 and probably will see in quarter 1 next year. But otherwise, we will see a stable growth coming back. It will also depend on 2 more factors. Number 1 would be how the monsoon is going to pan out and the inflationary pressure. And number 2 is going to be how fast the fiscal incentives are going to go back in the hands of people, especially in the rural sector, considering the fact that it is a pre-election year. So I think it will all depend upon these parameters. But since the indications are positive, we do expect it to have a positive impact.
Actually, since you raised that point, let's talk about that. The budget, if anything, was pro-rural or pro-rural consumer. I mean, that's music to ears for anybody who's invested in Dabur or the management of Dabur, I would presume. I know it's, you mentioned that it all depends on how fast the fiscal incentives go back into the hands of the consumer. But what are the initial signs looking like, Mr. Malik? Your channel checks.
Well, as far as our rural growth is concerned, we have seen the growth is at a faster pace as compared to the urban. And we do expect rural to grow faster, also on account of the fact that we have strengthened our footprint into the rural market through direct reach, through increasing our portfolio as well as expansion on the geographical reach. So we do expect, and we have seen the signs of rural growing faster than urban. We do expect rural to show better results as we go forward in the next fiscal.
Which would have been the natural course of business as well, Mr. Malik. Does the budget and the resultant impact add to the impetus?
Well, as I said earlier, certainly it has a positive implications, and considering that it is a pre-election year, a lot will depend upon how fast it will be executed, and that will determine the pace at which the rural will see the benefit of it coming back in terms of consumer demand being increased.
I'm guessing you haven't seen signs of that as yet. I mean, just wondering if channel checks suggest otherwise. Last couple of things, Mr. Malik. One is, you know, I'll actually first focus on the domestic business before I move to the international business as well. The much drummed up story for the last 18 odd months has been Ayurveda, and almost across the brokerage notes, I see as Dabur being one name that has been able to withstand what people like to say the Patanjali onslaught. There's a very interesting comment that has come into 2 notes that I read, that in the state of Uttar Pradesh and a couple of other pockets, you are now starting to win back and eat into markets that were earlier dominated by players like Patanjali and some of the other localized brands as well. Is that truly happening, and what is leading to such a shift?
Sure. See, we have been into Ayurveda and healthcare sector for the last more than 130 years. And with the competition coming in, I think the whole market size has expanded. And what we saw in the last 12 to 18 months is that sorry, we got the benefit of the expansion and the awareness of Ayurveda, especially in the oral care sector. We kept on improving. There was some impact on the honey category of products for us in the initial phase, but what we have seen now, that all the business is coming back to us and we are actually gaining the market share. So that has been again a very positive impact on our company on account of Ayurveda. And also we have been introducing more and more new products which are more Ayurvedic, herbal, natural care, which are beneficial from the healthcare perspective to the consumer. So we do see that we will be in a position to strengthen our position in the Ayurveda sector, and will be able to grow our market share as we look forward in the future coming months and coming years.
Would you believe, Mr. Malik, that this would be a Dabur specific happening? The reason I ask this to you is, I mean, I'm just trying to get a sense of whether the established incumbents will now start, you know,
clawing their way back into these markets, which companies like Patanjali and some of the other newer names have started taking share from? Or do you believe this will be a Dabur specific thing and maybe the larger players as a whole will not be able to do the same?
Well, I think certainly, as I said, the market share of Ayurvedic product or the market size has actually expanded. So therefore, more and more players are coming into the Ayurveda and the herbal natural care sector. However, a lot will depend upon the quality, the innovative product, and the benefit that can be derived by the consumer. And as I said earlier, since we have a strong research-based supported by our existence of last more than 35 years, will give us an added advantage in terms of bringing out more and more innovative products which are beneficial to our consumers, and also strengthen our position in view of the highest quality standards that we always maintain to help us to strengthen our position in light of the competition that will come through the new players and the existing players. We do see that we are in a very strong position in view of our value proposition that we offer to the consumer to keep on strengthening our position in the market.
Okay, Mr. Malik, one last question really, the international business. Now, optically, while it may show a decline, I think in constant currency terms, almost all of your international markets showed meaningful growth. And please correct me if I'm wrong here, but for maybe US, the US business of Namaste, were you individually happy with what the international business did in Q3? And how has Q4 been for that part of Dabur?
Well, as far as our international business is concerned, in their local currency, they have been growing very well, and they have been gaining market share in their respective countries. However, the major impact that we have seen till Q3 last year or current year has been on account of exchange fluctuation. We had seen a very steep devaluation in currencies like Egypt, Nigeria and Turkey, which has annualized now in the month of November. So that a major negative impact on consolidation that we have seen of the currency devaluation is behind us. Therefore, we do see that advantage coming back to us now. Having said that, we have to be also careful in terms of any future likelihood of further devaluation in these currencies, and keep that in mind. However, when we look at in the local currency, we have seen a very healthy growth in the local currency and local constant currency terms in this respective market. And going forward, we do expect it to have strong growth in their constant currency or in the local currency.
Great. We wish you all the best for that, Mr. Malik. Thank you so much for taking the time out, and look forward to talking to you post the quarterly numbers as well.
Thank you very much.
That's Lalit Malik of Dabur. By the way, I just want to mark a couple of pockets of strength right now in a very strong market, I must add, or a reasonably strong market. ITDC is up 9.5%. I think the volumes are decent too. So MMTC, ITDC have suddenly made it a habit of giving some really strong bouts of moves. MMTC might be down today, but last week had a fabulous move. ITDC today up about 9.5%. Ashoka Buildcon, 447 crore order. That's revved up the stock 6.5%. Really strong move coming in for that stock as well. Today, some of the shipping and the shipping related companies are doing okay. So SCI, Aban Offshore have had a decent move. So good going really for those stocks as well. And amongst the large caps, I think Indiabulls Housing Finance stands out on the index. That stock is up about 3% now. So really good going. In addition to Bharti Airtel, these are the top two movers on the index. Okay, the NHAI's toll operate transfer model has had a brilliant opening with the global investment giant Macquarie eventually bagging the project. The model which requires the successful bidder to make an upfront payment to NHAI is also being touted as a winning formula for the road regulator, since it gets an upfront payment for an asset that's going to be monetized over the next 30 years. But should one judge a scheme's success with just one auction? And are road builders justified in feeling left out since they claim they don't have the money to make an upfront payment? Joining me to talk about all of this is Mr. Deepak Kumar, Chairman at NHAI. Mr. Kumar, good having you. Thanks so much for joining in. First, tell us about how will this whole plan shape up? You've had one very large, successful opening. What next?
देखिए, जो लास्ट हम लोग ने TOT का बिड किया था और आप भी पब्लिक डोमेन में भी है कि वी हैव गॉट अ वेरी गुड रिस्पांस एंड द मैकरी टाइप ऑफ कंपनी हैज़ कम एंड दे हैव गिवन अ बिड ऑफ 50% अबव व्हाट वी एक्सपेक्टेड. अभी हम लोग अप्रैल में, मई में मे बी अनदर ट्रांस ऑफ TOT मॉडल विल बी बिड आउट, एंड इन द नेक्स्ट फिस्कल वी प्लान टू बिड अनदर 3 ट्रांस ऑफ दिस TOT बिड्स, एंड वी एक्सपेक्ट, and that's our expectation. It may be plus minus. I don't know how much how it will go, but approximately we expect $3 billion from those TOT assets, which we will be lending out in the next financial year, and 1,600 kilometer more. So we expect a very good response based on the last response which we have got. एंड उसके बाद लगता है कि दूसरे जो इनविट मॉडल है जिस पर हमारे बजट में भी अनाउंसमेंट हुआ है, इनविट पर भी हम लोग जा रहे हैं. तो जो डिफरेंट टाइप ऑफ पब्लिक का सपोर्ट चाहिए, हमको डिफरेंट टाइप ऑफ फंडिंग चाहिए, वो भी हम लोग इनविट के थ्रू लेना चाहेंगे. तो कुल मिलाकर हम लोग लगता है कि 60-70,000 तो जो अभी हमारे प्रिस्क्राइब्ड है लेने का बजट में प्रिस्क्राइब्ड है, हो सकता है उससे ज़्यादा एक्सीड करें हम लोग. 60,000-70,000 करोड़ से ज़्यादा एक्सीड करेंगे पिछले अगले साल में.
इंटरेस्टिंग. क्या आपको लगता है दैट यू विल नीड टू डू large orders only, or will you do a string of smaller orders and bunch them up so that other players can also participate? Or kya, and will this actually pick up steam in FY19 in a meaningful way?
नहीं, पहले तो उसका आंसर मैं बाद में दूंगा कि आप कैलेंडर ईयर 18 में या लास्ट 17-18 फिस्कल में हमारा अवार्ड लास्ट ईयर के डबल पर जाएगा. मतलब वो कोई ऐसा डिले नहीं हुआ है. मैं बताऊंगा, उस पर आगे बताऊंगा आपको. मगर इसका पर्पस, एक तो पर्पस ऑब्वियस है कि हम मार्केट से पैसा ले रहे हैं एसेट मोनेटाइज करके, तो इट विल हेल्प इन फर्दर ऑर्डरिंग, फर्दर अवार्डिंग द प्रोजेक्ट्स. बट दूसरा पर्पस भी है. देखिए, इसमें 30 ईयर्स के लिए हम दे रहे हैं एंड रिप्यूटेड ऑर्गेनाइजेशंस को दे रहे हैं, तो हम 30 ईयर्स में वी एक्सपेक्ट ए वेरी हायर लेवल ऑफ मेंटेनेंस ऑफ द हाईवेज. हो सकता अभी हमारे सिस्टम में क्या है कि हम लोग 30 मिल पर 4 साल 3 साल के लिए OMT पर देते हैं, कॉन्ट्रैक्ट देते हैं, एंड मतलब वी फील कि तो हमारा जो मेंटेनेंस है उस टॉप लेवल का नहीं हो रहा है जो टॉप लेवल का होना चाहिए. तो वी एक्सपेक्ट दैट थ्रू दिस TOT मॉडल द मेंटेनेंस विल ऑल्सो बी अपग्रेडेड टू ए वेरी हायर लेवल ऑफ कैटेगरी.
Okay. All of the money, Mr. Kumar, that you will raise, will all of this be for FY19, or will this be for periods beyond FY19? You mentioned a fairly large sum. Will all of these be used in FY19 itself?
This is the maintenance program of those highways which have been bid out in TOT. I am talking about these nine roads which have been taken up in TOT. These 9 roads will be given to the concessionaire for a period of 30 years. During these 30 years, they have to maintain to a very high level of this, which we have prescribed in the bid. तो हम लोग लगता है कि जो ये TOT मॉडल में जो प्रोजेक्ट बाहर जा रहे हैं, एसेट्स हम लोग मोनेटाइज कर रहे हैं, तो वी विल गेट द मनी ऑफ कोर्स, एंड दैट मनी विल बी यूज्ड फॉर फर्दर अवार्डिंग. मगर दूसरा पार्ट भी बहुत इंपॉर्टेंट है कि थ्रू दिस TOT बिडिंग प्रोसेस, ये जो प्रोजेक्ट हम TOT में दे रहे हैं उसमें मेंटेनेंस बहुत हायर लेवल का होगा. जो अभी हम लोग मेंटेनेंस थ्रू छोटे कॉन्ट्रैक्टर थ्रू कराते हैं, एक बड़ा ऑर्गेनाइजेशन आ रहा है जो मेंटेन करेगा हमारे इस 9 प्रोजेक्ट्स को.
Okay, so before I ask you about TOT, Mr. Kumar, can you give us a sense कि ऑर्डरिंग की पेस कैसी होगी FY18, FY19 में?
देखिए, अभी in the last 5 years, the average award per year has been of the order of 2,700 kilometer, 2,800 kilometer. The last fiscal, that I'm talking about 16-17, the total award was of the order of 4,400 kilometer. This year we have already reached around 5,000 kilometer. The March is now ending, and we hope to award around 2,500 kilometer or maybe slightly more. So total award this year, this fiscal जो खत्म हो रहा है मार्च में, will be around 7,500 to 8,000 kilometer, and that will be really double the award which we have awarded in the last fiscal year. So मतलब ये कहना कि नहीं disrupt नहीं हुआ है. Obviously the process has picked up slightly late, और लेट होने के कारण है क्योंकि भारतमाला सैंक्शन जो मिला है हम लोगों को ये अक्टूबर मिला है. तो पोस्ट भारतमाला सैंक्शन प्रोसीजर हैज़ बीन लेट डाउन, कैसे सैंक्शन होंगे प्रोजेक्ट, कैसे उसका अप्रूवल होगा, उसके बाद से इट हैज़ पिक्ड अप. तो थोड़ा डिले उस कारण से हुआ है बस, मगर अभी हम लोग फील करते हैं कि ये डिले के बाद भी हम लोग काफ़ी अच्छा परफॉर्मेंस देंगे इस बार 31 मार्च के बाद.
ओके, सो पेस ऑफ ऑर्डरिंग हैज़ नॉट स्लोड डाउन. आपको लगता है कि FY18 में भी डबल होगा FY17 से, विच इज़ गुड न्यूज़. टेल अस अ बिट अबाउट TOT and what are the implications of the success that you made with the first bid for road ordering going ahead?
देखिए TOT जो मॉडल फर्स्ट टाइम एक्सपेरिमेंट हुआ था, और ये मतलब एक तो मॉडल ही बहुत अच्छा है क्योंकि बहुत इसके पीछे बैकग्राउंड वर्क तैयार हुआ, बहुत सारे रोड, सारे एसेट्स के बहुत डिटेल में हम लोग गए, उसमें क्या रिक्वायरमेंट है, और उसके बाद जो रिस्पॉन्स आ रहा है ये शो करता है कि देयर इज एन एपेटाइट फॉर द सच प्रोजेक्ट्स. और एपेटाइट उनके पास है जो जिनके पास कैपिटल है, जो बाहर में है कैपिटल है, चाहते हैं इंडिया में इन्वेस्ट करना और खासकर इंफ्रास्ट्रक्चर में इन्वेस्ट करना चाहते हैं. तो इट्स एन ओपनिंग. और दूसरा क्या है कि इसमें हम कंस्ट्रक्शन रिस्क उनको नहीं दे रहे हैं, हम बना प्रोजेक्ट को उनको दे रहे हैं. कंस्ट्रक्शन में हो सकता है रिस्क हो थोड़ा सा कि वो प्रोजेक्ट कैसा चलेगा, लैंड एक्विजिशन कैसे होंगे और नहीं होंगे, इसमें कोई रिस्क नहीं है. तो कैपिटल इजीली आएगा. ये आगे भी हम लोग को उम्मीद है कि अगले 2 या 3 ट्रांस जो हम करेंगे, ये बिल्कुल हम लोग उम्मीद करते हैं कि अगेन बड़ी कंपनियां इसमें आएंगी और बिड करेंगे, और वी आर एक्सपेक्टिंग द बेटर, हो सकता है इससे बेटर परफॉर्मेंस अगले साल करें हम लोग.
Okay, but will you give out, I asked this to you earlier as well, Mr. Kumar, will you give out the bids in smaller quantities, या आप ये orders की size will it remain large?
देखिए अभी इस बार जो बिड हुआ था ये करीब इट वाज अराउंड 650 किलोमीटर और समथिंग. हमारा जो अगला साइज है विच वी आर प्लानिंग, इट इज़ इन द प्लानिंग स्टेज इटसेल्फ, वो भी करीब 500 किलोमीटर का एक ट्रांस है. तो बहुत ज़्यादा डिफरेंस नहीं है. हाँ, मगर डिफरेंस ये है कि जोग्राफिकली हम डिफरेंट एरिया में जा रहे हैं. फर्स्ट एरिया जो था वो हमारा साउथ में था, और हो सकता है कि नेक्स्ट पैकेज हमारा ईस्टर्न साइड में हो. तो जोग्राफिकली डिफरेंट हो सकता है, मगर साइज लगभग वही होगा. तो इसलिए जो अगले 3 हम लोग बिड कर रहे हैं, 3 ट्रांस की बात करते हैं, तो जैसे इसमें $1 बिलियन के आसपास हमारा था एक्सपेक्टेशन, तो अगले में भी लगभग वही एक्सपेक्टेशन हमारा है कि उसके आसपास $3 बिलियन के आसपास मिलेगा हम लोग को इसमें.
Okay, but ये the order sizes, Mr. Kumar, again, will it be broken up into smaller, string of pearls kind of orders, और क्या इसको एक लार्ज प्रोजेक्ट के हिसाब से ही आप अवार्ड करेंगे?
नहीं, बिल्कुल सेम मॉडल, जिस मॉडल पर अभी हुआ है उसी मॉडल पे जाएगा. पूरे 500 किलोमीटर के सारे प्रोजेक्ट, जैसे पहला जो नेक्स्ट ट्रांस हमारा आ रहा है उसमें वी आर होपिंग कि 9 प्रोजेक्ट के आसपास हम लोग बंडल करेंगे. दूसरे में 8 है, फिर अनदर थर्ड वाले में भी करीब 9 प्रोजेक्ट्स के बंडल कर रहे हैं. तो बंडल होगा, इट्स बंडल प्रोजेक्ट, नॉट इंडिविजुअल. इट विल बी ऑन द सेम पैटर्न विच वी हैव बिड आउट.
So if all of this has worked out so well, Mr. Kumar, what are you most optimistic about? Will it be the quantum of flows that will come out from NHAI? Will it be the funding availability जो आज तक मतलब अभी तक देखी नहीं गई है? What is it that you are most optimistic about when it comes to the NHAI functioning and the quantum of orders that you will give out?
नहीं, तो मैं 2 चीज़ बताऊंगा इस पर. एक तो क्या है कि इस बार जितने हम लोग ने प्रोजेक्ट बहुत काफ़ी संख्या में बिड आउट किए हैं, और इनिशियल अप्रेंशन था कि हो सकता है इतने प्लेयर्स मार्केट में नहीं हो, बिड हमारा कॉम्पिटिटिव नहीं हो. अभी क्या हुआ है कि सारे बिड्स, ऑलमोस्ट सारे बिड्स कॉम्पिटिटिव बिड्स हो रहे हैं. दैट मीन्स कि लोगों के पास एपेटाइट है, चाहते हैं प्रोजेक्ट लेना, और लोगों के ऑर्डर बुक्स बढ़े हैं, 2 टाइम्स 3 टाइम्स बढ़े हैं. और ऐसे प्रोजेक्ट, ऐसे कॉन्ट्रैक्टर्स सामने आ रहे हैं, ऐसी एजेंसी सामने आ रही हैं जिनका पास्ट रिकॉर्ड बहुत अच्छा है. प्लस ऐसे एजेंसी भी आ रही हैं जो बिल्कुल फर्स्ट टाइम एंटर कर रही है हमारे NHAI में. तो मुझे लगता है कि इस तरह के एजेंसीज के आने से, जिनका पास्ट रिकॉर्ड अच्छा है, या जो नई एजेंसी आ रही हैं और एपेटाइट शो कर रही हैं, कॉम्पिटिटिव बिडिंग हो रही हैं, तो हमारे सारे प्रोजेक्ट्स होपफुली ऑन टाइम चलेंगे, मे बी बिफोर टाइम चलेंगे. और आप देख भी रहेंगे बहुत सारे प्रोजेक्ट हम लोग ने इस फिस्कल ईयर में कोशिश किया है और अचीव भी कर रहे हैं कि उनका क्लोजर फाइनल, उनका जो मतलब कंप्लीशन हो बिफोर टाइम हो। ईस्टर्न पेरिफेरल एक्सप्रेस वे हम लोग अप्रैल में स्टार्ट कर रहे हैं, दैट्स बिफोर टाइम। दिल्ली मेरठ एक्सप्रेस पे हम लोग स्टार्ट कर रहे हैं, दैट्स बिफोर टाइम। दिस 1 year बिफोर टाइम वी आर कंप्लीटिंग दोज प्रोजेक्ट्स। हमारा यमुना ब्रिज बना है अभी, मतलब यू विल वेरी सरप्राइज टू नो कि 8-9 महीने में एक यमुना ब्रिज हम लोगों ने कंप्लीट कराया है, क्योंकि इतना फास्ट काम हो रहा है इस पर। तो हम लोग एक तो बुलिश हमारे इसलिए आई एम बुलिश अबाउट दिस कि बहुत सारे जो नए कॉन्ट्रैक्टर्स आ रहे हैं और जो हमारे कॉन्ट्रैक्टर्स जो काम कर रहे हैं, हम लोग लगता है कि काफ़ी फास्ट काम होगा। और जो किलोमीटरेज की बात करते हैं, पर डे जितना किलोमीटर कंस्ट्रक्ट करना, वो काफ़ी अच्छा रहेगा। दूसरा जो पास्ट NHAI इस पर काफ़ी काम कर रहा है और हमको लगता है कि अगले साल रिजल्ट मिलेगा, वो है हाईवे ऑपरेशंस पर। क्योंकि ठीक है हम कंस्ट्रक्शन का काम कर लें, मेंटेनेंस का काम कर लें, मगर जो ट्रैवलर्स जा रहे हैं उनको फैसिलिटी मिले, वो इनकी जर्नी बहुत अच्छी तरीके से जाए। तो हम लोग क्या कर रहे हैं, एक तो इलेक्ट्रॉनिक टॉलिंग बिल्कुल अब सारे लेन 100% इलेक्ट्रॉनिक टॉलिंग के लिए बन जाएंगे। इस मार्च में हम लोग टारगेट कर रहे हैं, मार्च के बाद हो जाना चाहिए। RFID टैग जो है उसको प्रमोट करना चाहते हैं। अभी आज के डेट में करीब 25% ऑफ द कलेक्शन इज़ थ्रू इलेक्ट्रॉनिक टॉलिंग मोड। हम लोग उसको काफ़ी बढ़ाना चाहते हैं कि लोगों को आसान रहे कि अपने ETC टॉल लगाएं, हाइब्रिड टॉल और ETC के थ्रू मूव करें और ले लें। तीसरा हम लोग चाह रहे हैं वे साइड एमिनिटीज़ के बारे में। हम लोग का टारगेट है कि अगले साल मतलब अगले अप्रैल के बाद से सारे टॉल पर वे साइड एमिनिटीज़ क्रिएट हो जाएं। छोटा मे भी बहुत बड़ा नहीं होगा, छोटा सा क्रिएट होगा, मगर रेस्ट रूम्स होंगे और छोटा छोटा खाने का स्टॉल होगा सारे टॉल पर। तो अब लोग इस डायरेक्शन में काम कर रहे हैं। तो मुझे लगता है कि अगले साल में हाईवे ऑपरेशंस पर और बेटर फैसिलिटी लाने के लिए ट्रैवलर्स के लिए काफ़ी काम होगा और NHAI देखिएगा कि इसमें काफ़ी अच्छा काम करके दिखाएगा आपको।
Wish you all the best for that, Mr. Kumar. Thank you so much for taking the time out and speaking to us. That's NHAI talking about how FY18 road ordering also will be double that of FY17, and the pace will only pick up in FY19. No wonder that the road construction space is in the thick of action. A clutch of these names: Dilip Buildcon, Ashoka Buildcon, and some of the others winning orders by the dozens. IRB recently won an order as well, so not surprised that these stocks are finding favor. As we speak, the market is finding favor, about 1% higher for the Sensex and the Nifty Bank as well. We're actually trading at the highest point of the day currently, so we've only strengthened as the day has gone by. Not bad for the markets. Take a break. In fact, wrap up this leg of Indian Open. Up next is the FNO Show.